Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Ryan King. He's the VP for Corporate Development of Calibre Mining, which you may or may not have heard of. It's sort of a new and up-and-coming, suddenly producer. But this is much the same team that brought one of my biggest successes late in my career at Casey Research, which was the New Market Gold takeover of Crocodile Mining, which later merged with Kirkland Lake, which became a 20-bagger for some people, more for others. It was a fantastic win there towards the end of my career at Casey Research. So obviously when that team gets going again, I'm interested, but there are quirks to this story. So Ryan, why don't you give us the overview of what we're doing, and then I'll get into my questions.
Sure, yeah, thanks for your time, Lobo. You mentioned New Market Gold and Kirkland Lake, and so obviously that transpired in 2015, where this same team acquired 3 producing gold mines in Australia. They were higher cost, sort of between 1,100 and 1,200. They were lower mine life, between a half a year to a year and a half year mine life. But we recognize the team that we have. We recognize some great geological potential at those mines. Often the saying goes, "Where's the best place to find more or new gold is at a gold mine," and that was essentially the case with the Crocodile assets that New Market Gold bought. And then within 16 months, we were very successful. We increased our exploration budgets at each of those mines, so much so that we made some pretty fantastic discoveries across the board, actually, at each of those mines, but one that had such a material impact that it really garnered the interest of the market and became one of the highest grade underground gold mines in the world, which led to a merger with Kirkland Lake Gold, which led to one of the best performing stocks, not just gold stocks, but stocks on the TSX. So fast forward to today, and that same team, the team includes Doug Forrester, a very well-known geologist, Doug Hurst, a well-known geologist, Raymond Threlkeld, again, another well-known geologist. That's the nucleus of our geological brain trust at Calibre. And they've identified these assets as having great exploration potential, near mine, new discovery potential at these assets in what we'd say district scale concessions. And so that's what led to this. These assets have been in production by B2 Gold for a decade, and prior to that, other owners for decades. And so we again follow that mantra of where is the best place to find more gold is around a gold mine. And so what we're doing here is we've just joined forces with B2 Gold. B2 Gold is our largest shareholder in the transaction now, and we are looking to make some hopefully material discoveries and exploration expansions of resources, and as well optimize the mines, because now these assets are 100% of our focus, whereas for B2 Gold, they represented less than 4% of their net asset value. They represented less than 7% of their production. So like any senior or mid-tier gold producer, when assets get lower in the portfolio, they don't get as much human capital, they don't get as much capital towards optimizing the mines or towards making some new discoveries or expanding resources. So therefore, that's a great opportunity and segue for us to come in and spend some additional dollars on exploration and look to optimize the mines if we can. So it's an incredible opportunity for us. Again, we're where we were with New Market, except for a little ahead with one of the mines. One of the mines has a very high-grade open pit resource that B2 discovered, and we think it's got a lot of upside. So that's where we are today.
All right. Well, I have lots of questions, of course. But the first one, before we even get into the rocks, has to be the location. These assets are all in Nicaragua, which has been not so much in the news lately, but it has been, to the degree it's been in the news at all recently. It's been not for good things.
Mm-hmm.
There have been riots earlier, and there's concerns about what's left of the Ortega regime. So, why Nicaragua, and how safe is it really to work there? How safe is your tenure and your assets if there is a regime change?
Yeah, no, obviously very valid questions, and it has particularly been top of mind for people and investors in the United States. But I'll tell you, Calibre Mining, before acquiring these 2 assets, has been exploring, as you know, has been exploring and developing assets in the northern part of the country called the Barossa concessions. We've attracted B2Gold to be at one point in time an earn-in joint venture partner. We've attracted IAMGOLD to be an earn-in joint venture partner, and currently we have a joint venture with IAMGOLD. And we've attracted Centerra at one point in time, which is now a significant shareholder of the company. So over the last 10 years, working in Nicaragua has been fantastic. You know, a very good mining legislation, a very supportive government to mining. It's one of the largest contributors to their GDP, gold mining in the sector, in the country. And you know, anytime you follow the process properly in terms of permitting, you know, I'll give you an example. To permit to drill at a project, you go through a full EIA, you go through a public consultation period, and then, assuming all goes well, you get your permit to drill. And Calibre's drilled, I think, collectively with its partners over the last 10 years prior to this transaction, probably in the tune of between $30 and $40 million worth of exploration in those concessions. You know, currently we have between 3 projects outlined 2.4 million ounces of inferred resources in what we would call a very significant mining district. Over 8 million ounces produced up there at the Barossa concessions in 3 different mines. So it's been really solid from a mining legislation perspective. You know, Nicaragua itself over the last 10 years, you know, you go there today, you see a massive difference than you did 10 years ago. We sat down with the Minister of Mines and Energy recently in Nicaragua, and he said, you know, in 2008, 50% of towns, communities, businesses across the country had grid power, whereas today, 96% of the country has grid power. So they've really been investing in their infrastructure to help attract foreign investment. And you're right. You know, last year, I think it was 2018, I think it was the IMF or the World Bank said to the government of Nicaragua, you know, you're getting behind on some of your payments. You've got to pay down some of your debts. And so they, what my understanding is, they went out to the people of Nicaragua and said, we're going to have to pull some pensions, we're going to have to pull some subsidies. And obviously that led to, you know, the Liberal Party and the Sandinista Party. You know, there was protesting between the two. There was then protesting against the government. It led to fighting. It led to deaths. It was a very tragic situation. You know, obviously we're seeing that all around the world. We're seeing that in Hong Kong. We're seeing that in different parts of the world now with such volatility. But yeah, it went through a good 3-4 month period, and it was tragic. You know, the army was out, the police were out. And that was sort of March to the middle of summer of 2018. And you know, to your point, ever since then, things have calmed down. People have been released from jail. There's more discussions have been happening. Tourism has started to increase again, which was one of the biggest drivers over the last 10 years. And outside of this particular incident, for decades now, it's been a good place to operate. It's been a good place to be. I think going back 10 years, it's been one of the fastest growing economies in Central America, and according to some statistics, it's been one of the safest jurisdictions in Central America, even more so than Costa Rica. So you know, they're spending money on infrastructure, on roads, on power. They are, you know, definitely encouraging foreign investment, albeit what happened in 2018 didn't help, but they're turning a corner, I believe now, and really starting to encourage the investors and tourists to come back. And you're starting to see that. You know, we were just in Managua a couple weeks ago for a major leadership integration summit with all 3,000 employees and contractors with the senior leadership team. And you know, one of the hotels that it was stayed at, the Hyatt in Managua, was full. So you're starting to see people come back. You're starting to see foreign investment come back. You know, I think there was a major canal that was looking to be built by the Chinese, either the Chinese or Chinese government. I'm not sure entirely, but and I don't know where that's at. But money is coming back in, and obviously with what's happened with B2Gold and Calibre joining forces, you know, we had the fortune to meet with the mines minister and have lengthy conversations with him. about how we're re-energized, we're refocused on these assets, we're going to be spending money on these assets, and that was well received. And he said, look, you have our full support. Let us know how we can help you. And then he actually invited us to meet with President Ortega. This was Friday night at 7:30, and so the CEO Russell Ball, Darren Hall, our Chief Operating Officer John Seberg, and myself went and met with President Ortega, discussing the transaction, discussing the region, and discussing what Calibre is going to be doing at those assets. And again, he was favorable, he was supportive. President Ortega was born at La Libertad, one of our assets in our portfolio, and we said, look, we're very excited because we see opportunity to potentially expand mine life, to make new discoveries, and keep all of the jobs intact there that we see as a great opportunity. And he said, look, you have our support. Let us know what we can do to help. Obviously, we want to keep the jobs and stay a good corporate citizen, and we'll do everything we can to put the exploration dollars into the ground and make new discoveries, like we did with Newmarket at the Fosterville mine. Had seen good exploration opportunities and spent the exploration dollars there. So, we've been there for 10 years. They've had one unfortunate mishap, which obviously led to fighting and deaths. I think they've learned from that. I think they're going to work hard to make that not happen again. And we like the jurisdiction. We not only like it from the good, solid mining legislation perspective, but we also like it because it's very heavily underexplored. There's a huge amount of opportunity there to bring modern exploration to the country, where we see good low sulfidation epithermal veins, and as well, up in the north in the Barosi concessions, where we identified a very interesting porphyry target and porphyry system that had never been discovered before. So lots of good opportunities for us, and potentially for us to even attract new partners to some of our exploration ground.
Okay, let me jump in before we start talking about the rocks. Let me say specifically, I've been there, as you know, and I found it much the same, but I'll go a little bit farther and I'll say I found that there was a great deal of state support for what you were doing, which in a strong state environment like that is very good. I also found that the average person, and I speak Spanish, so I did man-on-the-street type interviews in Managua, and the average person wasn't really all that keen on mining. The younger ones in particular are all very environmentally aware. Even the older ones, if they were in agriculture, they had concerns. But they all said, well, but the government wants mining to go forward, so mining's going to go forward. So in a way, that was great. It validates what you're saying from locals saying, the government wants this to happen. And in a place like that, when the government wants it to happen, that's a very good thing. But that goes back to my other question of what happens if the regime changes. And I understand that you're not a PhD in government relations, globally.
Sure.
So and you can't say anything that'll get you in trouble there. But this is really a concern. Can you address the question of longevity of what is already a very long-lasting regime there, particularly in light of the current uprising spreading around Latin America?
Mm-hmm. Yeah, it's hard to say. I guess with every government, you never know what new policies may get put in place, what they may get elected on and promise and then actually execute upon. But really, when you look at mining in a country, any country, for example, if you do proper CSR work, you make sure you are a good corporate social neighbor, you have a good social license to operate, particularly within that 5, 10, 15 kilometers around your mine sites. That's very important. In terms of what could be in the future, it's really hard to say. I mean, we've met with the current government officials. We've been in the country for over 10 years now, and obviously, as you said, with the same government. But I believe, if a corporation does something good, benefiting the country, making sure it's safe, making sure you're following all rules and regulations and mining legislation, that's probably something that the government and the people want to hear. You see the benefits
Sure.
going to the people.
Okay, so when's the next election? That's a simple question, doesn't it?
Yeah, I think the next election would be either early or mid 2021.
2021. Okay, so that gives you time to start proving, your worth, creating jobs, and doing all this stuff on the ground.
Correct.
All right. Okay, so let's talk about that. There's a new market analogy here now, but it wasn't that way at first. When you guys went to Nicaragua, you were exploring. So were you thinking that it might end up being that you could pick up producing assets? Or, I mean, that wasn't part of the story. So why did you go there in the first place when the producing mines weren't for sale?
Well, yeah, I mean, this started back in 2008. Right, we were able to acquire the Barosi concessions from from Yamana, and I can't remember. Yamana just merged with another company, Meridian or somebody like that, and they hadn't spent a lot of time in the country. We knew there was an opportunity there. We knew that there was past production there. We knew that B2 Gold had just gotten into the country. Felt secure about that, felt secure about the geological potential. So yeah, it absolutely did start out as an exploration opportunity for us, again, 10 years ago.
Yeah, wow, 10 years already.
Yeah,
11.
Yeah, it's been a while. But so I mean, over the years, we've had exploration success. Over the years, we've brought in partners. And then obviously over the years, exploration dollars have been there and exploration dollars have not been there. The macro trends have changed, and they always will change. And so it was hard for a few years to find dollars to spend on these, and therefore we brought in partners. But that also speaks to the geological potential of these. Now, we know that exploration is challenging, very challenging. And so we had to, sort of piecemeal this out to, almost as a prospect generator. And
I remember that.
And then Newmarket came and went in a very quick turnaround, 14, 16 months. And out of that, we realized that, where the sweet spot is if we can acquire production to complement the additional exploration upside, not only around the mines, but within projects within the portfolio. And have cash flow and possibly reduce costs and optimize the mines and find more. That's a sweet spot that we think, we've had success with, and we think is a good opportunity for us kind of going forward, given that, it has been challenging exploration sector and market over the last 5 years. Yeah, maybe this is changing now, but we've put ourselves, I think this management team has pivoted and found that if we can acquire some production, add value with that production, and then help complement not having to go back to the market to raise additional dollars, using our cash flow to fund our exploration, that makes a lot of sense.
All right. So part of the argument is then that these assets that you acquired, the producing assets that you acquired, are better with your exploration portfolio. There's more upside combining the two. Is that right?
Yeah, I think that's fair to say, given also that we have familiarity with the country. We know the processes, the permitting processes, and all of the above. So I think there's some synergies there indeed.
So, but if that's so, why didn't B2 just buy you?
Well, I guess the point to that is that maybe there wasn't something significant enough or advanced enough for them to do so. If you look at B2's trajectory over the last couple of years, I think they bought CGA Mining in 2014. They bought Otjikoto in Africa. Then they bought Fekola. So I suspect that our project at any given time that they may or may not have been looking wasn't far enough advanced or wasn't big enough. There was in 2012 and 13 when we discovered what's called the Primavera gold copper porphyry system. It became very significant. B2 Gold started to spend a lot of money on it. We put 3 or 4 drill rigs on it. And when we initially discovered that in the first couple of holes, right in the back of a farmer's field, power, roads, we drilled 260 meters of 0.8 gold and 0.3 copper. So a very significant near-surface porphyry type system. And for your readers, and most people know, that know the sector, porphyries can be very large, very large tonnage, and if decent grade, can be company makers. Now, obviously, that didn't happen in this instance. A big fault came through the system, and we think either displaced it along trend or down plunge or potentially eroded away. But since then, the geological team at Calibre have identified a number of other targets that are undrilled that B2Gold between then and now went off and acquired a bunch of other more advanced construction-ready projects, and that was their cultural shift within the company there. So that speaks to that. It just didn't get to be as big as they needed it to be, but maybe there's still potential because the dollars being spent on those assets over the years were very minimal, and maybe that changes now.
Sure. Okay. Let's turn the question around backwards then. If the assets, okay, let's say it makes sense, they look at their portfolio, 80-20 rule, they focus on the top 80% and let go of the bottom 20, and their focus on Africa, it'll simplify their life not to have, to run operations in another country, Nicaragua. So let's stipulate that. But if these assets are really potentially company makers for you guys, there's that much added value. Would they really sell them? If there's that much upside, if you guys think you can, make more money, why would they sell these to you?
Yeah, that's a great question. So to step back a little bit, we've worked on this for almost 2 years, working on trying to acquire these assets. And B2Gold became a gold producer in Nicaragua in 2009. And then they built La Libertad's mill. So La Libertad was a heap leach operation. They saw an opportunity to build a milling facility. They did so, spent over $120 million on that, put in a milling facility, and did some exploration work. And they did some exploration work at La Libertad, of course, and at El Limon. And then in 2013, they started to acquire additional assets. And I think it was 2013 that they closed or announced acquisition of 4 different operations around the world. And, so that, in my mind and in our minds, you start to look back at the history of these assets, your human capital gets stretched, your capital itself gets stretched, and they had mine life in front of them. They were having success at those mines. And so then all of a sudden they're building an asset in Namibia, they're building one in Mali, they're operating in the Philippines. So just a little bit of people going out and executing on additional plans to build the business. Now, so I honestly believe that this is a true win-win scenario because we believe there's great upside, and I'm sure they do too as well. And I guess the point is, B2Gold didn't take all cash. They took cash and they took shares. And they are our largest shareholder now. So they're a 30% shareholder of Calibre Mining. And in my opinion, there was a lot of thought that went into this. To your point, I think you said something about people going out to different parts of the world to expand their business. And so for us, we have a chart in our presentation that shows, or a graph in our presentation that shows acquiring an asset and the asset being 100% focused by the acquirer. So the focus of people, the focus of time, the focus of capital going all into those assets does indeed, if you look historically at different transactions, make a material, generally, I'll generalize that, but does make a material impact in those assets because you're spending all of your capital on those assets. You've got your best people on those assets. So, and I think B2Gold recognizes that. I think B2Gold sees that we will be 100% focused on those, and there is opportunity there. And so therefore, let's keep 30% of the company because we'll benefit from the fruits of their labor, and we'll be able to see good upside for our share position, as well as be able to focus on our other assets as well. So in a sense, if you will, they almost have 2 horses in the race. They've got B2Gold, which is their pride and joy. It's a plus $4 billion company where they started with these assets in 2009. And then they've got Calibre Mining, a 30% ownership with a solid team, with a focused approach. I think that's really the argument there.
Okay, so let's say they'd rather have 30% of a team that's focused 100% on these assets than have a 7% distraction of their efforts. Let's stipulate that. What specifically is this 100% focused team planning to do different or better? How are you going to add value here?
Yeah, that's a great point. I mean, we've done a lot of due diligence now. We hired RPA to help us through our due diligence process. And I'll step back just a little bit. It was 2017. Remember, B2 Gold has been there since 2009. They've acquired a number of different assets around the world, and it was 2017 when they rediscovered the El Limon Central vein structure, which is 2.5 kilometers long. It's a very high grade open pit. Our reserve grade is north of 4 grams. Our resource grade is north of 5 grams. And so they made that discovery 8 years after starting production in the country. So from our perspective, it's very prolific. There's district scale exploration potential here. I think El Limon has over 300 square kilometer land package. La Libertad is over 600 square kilometer concession land package. So great opportunity to discover new zones. And that's particularly what our focus is finding expansions to El Limon. So down plunge extensions, along strike extensions to the El Limon vein structure. But also there's a number of additional targets that we're slowly but surely identifying and will be spending dollars on. I think over the next 12 to 15 months, we'll be increasing the meterage by 6 to 8 times what it was historically. So that's really, again, I keep using the analogy to Newmarket, but that's where the change was. It was spending a lot more money on great targets that hadn't been drilled. Or in some cases had been drilled. But
I got it. It's not that you think you're going to come in and you're going to be so much better miners, you're going to make these mines more profitable. It's that you're going to focus on adding ounces and therefore mine life and overall profit produced.
100%. In our due diligence, upon the two reviews of the two mines, El Limon with this new high-grade open pit now structure, most of the value in the net asset value, most of it went to that. I think it was probably almost 97% in the review of our valuation. Libertad, because it has no reserves, because it only has 600,000 ounces of resources, basically had zero or less than zero in our calculation. Can't remember the exact number. But when you look at it, and that's where we see the big value driver going forward. If we can discover new zones, if we can, and which we will, we think we will, expand on resources and convert some resources to reserves, that's going to be one of the biggest value drivers for this company. We don't have to do much more, but put dollars to work at finding new ounces in the ground where, a mine has been in production for over a decade and well beyond that over the years prior to B2 Gold. So that's where the big value driver is for sure. Okay.
Well, let me invite you to make a forward-looking statement here. You can decline if you want, but when I visited Fosterville down under, and we had a theory. You're right. There was exploration and there were discoveries on the other mines too. But really, Fosterville drove the story, and there was a theory that the grade was so, but it might improve at depth. And it wasn't just a theory. You had started to hit higher grade bits at the deeper zones in some of the areas.
Yeah.
And I went down in the mine with your team, and I looked at it. And not only was there like this vein here, I mean, there were whole zones that were already higher grade than your reserve, and they were already going into the mill. So it was more than a theory, right? You'd already made discoveries that you didn't have time to drill off. The theoretical thing, though, was that this would happen across multiple zones, and that took a while to prove up, and it did. You did get into higher grades at depth all throughout there, or at that time Kirkland Lake did. Do you have that level of confidence? Or is there a specific geological theory here, or did your due diligence turn up anything that exciting, or is it more just a conceptual hope? These are huge properties, they're underexplored, and our team should be able to find more.
Well, honestly, I think it's a bit of both. And the reason I think it's a bit of both is because the mines themselves at this point in time are essentially transitioning. I'm going to use El Limon for an example. It's historically been a 4 to 6 gram underground ore body blended with some smaller, lower grade open pits. Now with the discovery, or I'll call it the rediscovery of the El Limon vein structure, they have been stripping it for a while and mining, which we believe much higher grade material. If you look at some of the drill holes in that system and you see our new reserve grade, north of 4 gram open pit versus 4 to 6 gram underground, you're going to see a very significant step change in cost. And we
sure, sorry, let me jump in there and ask. You say rediscovery. Can you be specific on why that is? Was this faulted off somewhere and they didn't know where the Limon vein continued, or why do you call it rediscovery?
Well, I don't know too much about the specifics about B2 Gold's approach, but I understand there were some old workings along this vein, and maybe there was a theory or understanding that that there may not be much left in terms of resources or reserves or upside, but ends up they were very, very small workings and a very small portion of the overall structure. And therefore, when B2 Gold got in there and started drilling, they started to understand, wow, there's a lot more here. And there's open pit resources here, right from surface down to 150 to 170 meters. Pit designs go down there now, and we think there's opportunity to expand that. So that's kind of where the rediscovery part comes from, is it was a past historical vein structure that was mined, albeit decades ago.
Sure.
But yeah, that's where this new discovery.
Actually, that makes sense to me. If you've got old pits and a few little mine shafts here and there, 4 or 5 grams, for underground mining, that's not going to be very exciting. But if you realize, wait a minute, these are all at open pit depth, then that completely changes the picture.
Yeah, I mean, specifically from a cost perspective as well, open pit mining is going to be a lot lower cost than it will be for underground mining. So, B2 Gold started stripping away the waste at the El Limon vein structure back in December of 2018. They pre-stripped in Q1. They were pre-stripping in Q2, and I believe started to get into the 10 to 20 meter width ore shoots in early Q3. So, as per their Q2 conference call, they talked about the assets themselves, and particularly El Limon, transitioning now to higher grade ore. So it's going to be interesting to see that going forward.
Okay, so what is the work program? You've got, mine expansions, you've got operations now to consider, plus, the value driver here, you hope, is exploration. So how much money is there for that exploration? What's the budget over the year ahead, and how much money do you have?
So I'll step back a little bit. So for us, being that it's our only 2 cash flowing assets, the focus is execution. So it's putting out forecasts and delivering and executing on those forecasts. I believe if we can do that successfully, we should start to see a closer re-rate towards our peer average, in my opinion. And in doing so, we've made a pretty significant change, a material change already at the La Libertad mill. So this is a mill that throughput is 2.2 million tons of ore a year. Million tons of ore a year. So it's a big, hungry mill. What we've done is we've idled down one of the ball mills. So that's going to bring us from 2.2 million tons annually down to about 1.5, 1.6 million tons annually. And in our opinion, in doing so, that's going to reduce costs at the processing facility. That's going to reduce mining costs. And it's going to help us really focus on our business and our margins. So for us, it's not just about pushing through and getting the ounces up, but it's really a focus on margins and the quality of the ounces that we produce. So that's one material change that our Chief Operating Officer, Darren Hall, who was also our Chief Operating Officer at New Market, made in October 15th when we closed the deal. That was put in place. And so then, and from that, I believe, and he believes, that there'll be incremental changes, optimizations within the plant, within the mining, to help us ensure good quality ore is going to the mill and we're making a profit. And I think that's one of our biggest opportunities in front of us. Secondly, as we've mentioned, it's all about exploration. So there are no reserves currently at Libertad. We're mining resources. We're mining from this area called Heavily Underground, which we think has great exploration potential. We're also mining from a newly permitted zone called Heavily Antenna. So B2 Gold did some very good work in country. Their reputation in country for CSR was was very positive. They did a lot of good work in the country. They relocated 22, I believe, or 25 homes around a mining zone, and then just got the permit as we announced the deal. I may add, they announced the permit and approval to start open pit mining at what's called the Javali Antenna. That currently has 285,000 ounces inferred at 7.8 grams per ton gold. Now, I don't think that's all going to go to the mill. You're going to put it's going to be open pit mining. You're going to put a pit shell on it and mine economics on it, and probably you get between 70 and 80,000 ounces at between 3 and 3.5 grams. But the point is, the grade is increasing. The average grade in 2018, I believe, was 1.2 or 1.3 grams per ton gold. So we see an opportunity to see grade increasing, like B2 Gold has disclosed, and also with that reduction of throughput, a focus on the quality of ounces. So that's one. But there's just so many different zones. We could be here for a while talking about.
Sorry, let me ask you about that last. Let me jump in and ask you about that last one you just said. That's interesting, particularly for a company this size. I presume you're not going to go the full feasibility route before you do this expansion or whatever. You're going to drill it off to your own internal satisfaction. When you're confident the ounces really are there, and you know how to model it and mine it, you'll just do it. Is that a fair assessment?
Well, look, because we have no reserves and we are mining resources,
you're already doing it, right?
We're already doing it, and so we're going to be doing everything we can to ensure economic ounces, ensure mine continues, and the 2,000 plus employees that work as a contractor or at the mill continue to have their jobs. And I think that's an important role for us going forward. I think within the country and within the unions and the employees, they were under the understanding that the mine was closing. And we're doing everything we can to try and extend the mine life and make sure those jobs stay intact. And that includes a pretty healthy exploration budget. But to your point, yes, I mean, if we see resources there that we believe are economic, we'll be mining those and not waiting for reserve conversion.
That's a really interesting thing you just said, rewinding to what you said for just a moment. If the locals were expecting the mines to shut down, you guys are the heroes now. So that should create substantial political capital for you guys. Because, I mean, if 2,000 jobs were slated to be axed and now they're not, even if you can only hold on to 1,000 of them, that's much better than what they were looking at before.
I think so, yeah, and that's the feedback we got within the country. I mean, it's not guaranteed, but because of our re-energized approach, our focused approach, again, that these are 100% of our cash flow and our assets, we'll be doing everything we can, as you can imagine, to ensure profitability, but ensure extensions to mine life. And, we don't have it finalized yet, but we're looking at, as I said, a 6 to 8 fold increase in meterage. So anywhere between $10 and $12 million will be spent on exploration. And albeit, some are expansions to resources and some are new discoveries that have great gold and soil anomalies on surface, followed up by trenching that look analogous to some of the open pit mines that B2 Gold produced from. So we're very excited about all those opportunities.
For people that have followed the story for a while, can you tell us if you're going back to the northern Botosi area to explore as well? Is that dead, or will we see our hopes tested up there?
Yeah, no, I mean, great question. That is not dead. We like that a lot. I mean, we've outlined 2.4 million ounces in inferred resources in 3 projects. One at Sayuna, one at the porphyry gold copper deposit Primavera, and of course with IM Gold, our joint venture partner IM Gold continues to earn into 70%. It's 51.49 now. But it's what looks like to us a very interesting low sulfidation vein system with tens of kilometers of potential. So we like that a lot. We think there's good potential there. Albeit, right now our plans are to focus on extensions of mine life at Libertad and El Limon, which we do have. But for sure, it's a great suite of assets in the portfolio, and we'll prioritize that for the year to come.
Okay, so you mentioned a figure. You said 12 million. Is that the exploration budget for the next year?
Well, that's what we're planning on. We've got to get board approval, but that's what we're planning on. Yes.
All right. And I noticed at the closing of the deal, you had $45 million in cash, but presumably some of that has to go into the plants and other things. So, is that exploration paid for, or?
Yeah, that's a great question. So, yeah, $45 million Canadian is what was left at the end of the transaction. So we currently have a very healthy treasury. We've got a $10 million payment to make to B2Gold in October of 2020. We've got a $10 million convertible debenture to B2Gold that yields only 2%, and that's good for 2 years. We can convert that at a volume-weighted average of 81 cents, or they can elect to convert it at 75 cents. So it's just a little additional optionality for B2Gold, and very small amount of yield that is needed to be paid, or interest that needs to be paid. So if you take that into consideration, and where we believe the assets are going to be at, on Monday of last week, we guided for the partial period of Q4, our costs would be all-in costs would be between $950 and $980 per ounce, all-in sustaining costs. So at current gold prices, this should generate some pretty nice free cash, or positive cash.
Are you expecting to be bottom line profitable out of the gate, or do you expect that to take a couple quarters to dial in?
Given the transaction and everything, it may take a quarter, but for 2020, we're going to be, I think it's going to be very healthy margins there, and for sure cash flow positive and free cash flow positive. We'll be adding cash to the balance sheet. And so when you factor in
operating profits, operating profits, yes, but bottom line profitability might take longer. Is that right?
It might take a slight bit longer, but I think once we're into 2020, for sure we'll definitely be free cash flow positive.
Okie doke.
At current gold prices.
I have a million more questions, but we've already gone on pretty long, and I appreciate your time. So let me just ask the one question I have to ask everybody, and that's the skin in the game question. Have you, Ryan King, put any of your own hard-earned money into this deal, and has senior management put cash in, or does everybody just have free options?
Yeah, it's always one of the most important questions, and it's for me, it's a question of, if management does put money in, that means they really believe in what they're doing. And for us, every single person in the senior management role here at Calibre Mining put either 1 or 2 times their base salary into buying shares in the company. So our last financing was 60 cents. For me, it's probably my biggest single largest investment I've ever made in the gold space. Frankly, it makes me a little nervous. It makes my wife even more nervous.
That's good.
But I believe in the opportunity. All the due diligence that I've done, I really enjoy working with this team. I really have very high views of the board that reviewed the geological opportunities and our team there. So I think there's great potential here. So therefore, I put my money in, and I'm not somebody that's, and same with our whole team. I think collectively we put $6.5 million into this recent financing. We have a total of over $10 million invested in the company. And to your point, we've been a exploration company in country for 10 years, funding the exploration company in country for 10 years. We did a consolidation last year. So between myself, the board members that have been involved with Calibre over the last 10 years, I think our average cost base is 90 cents. So we really believe that there's an opportunity here. And so we put a lot more of our own money into this company, into this financing. And this team is not here for a quick dollar. This is going to be a 2+ year, 3+ year journey. And I don't see anyone pulling out of this quickly at all.
All right. Well, thank you very much. You've been a good sport answering some tough questions there. The best of luck to you in all of that.
Thank you very much. Appreciate the time, Lobo.
All right.
Take care.